Eric Mwatha with the weekend market analysis for November 30th, 2013. On Friday, short session, market was slightly down as far as the Dow is concerned. Nasdaq had a nice close to new highs, and we see the S&P 500 down about 1 point. Really slow session, but the market ended off the highs of the day. So we'll see what Monday is going to bring. If we take a look at what the market did for the week, Nasdaq was up 1.71. Very nice acceleration here. Take a look at the Dow. The Dow was up 0.13% for the week, and the S&P 500 was up 0.06, so almost unchanged for the week. So that's how the market ended. Let's take a look at what the charts look like. You can see from the Nasdaq here, we have another breakout on the weekly here with the 3 weeks above that weekly closing high. So the market is holding above those levels. Very nice. You can see here that the RSI has been showing momentum over the last couple of weeks. That's why the market has been moving higher. No surprise there. If you take a look at the Nasdaq daily, early on we were expecting this to either give us some type of a breakout here or negative divergence. The market has chosen to break out. So that's why is it a breakout? Because it's above these top lines here. So this could be where the market continues moving higher because it's broken out now. So we'll see what happens now. On the flip side, the only way this changes is if the market was to do something like that. So this becomes another confirmed top on the RSI on the daily. As of right now, it's breaking out, so we have to look at it from that standpoint. If you take a look at the monthly for the Nasdaq, this is very impressive. On the RSI, this is just a sign of strength, just like it did here in the 90s. This was a sign of strength here. So as long as the market is trading above 69.10, don't be surprised to see this thing continue pushing higher over time. As long as it's staying above 61.90, this market has the opportunity of moving higher. If we take a look at the Dow weekly, we see that this is the fourth week ever since we broke out above 15,658. So this is a very nice action here. So even any pullback that holds above this previous buy point is going to be still giving us indication that the market wants to move higher. Also, we were expecting negative divergence here, but you can see that now the market has broken out. Now, of course, there's a slight negative divergence if the market was to take a break here because we got this RSI high and this high. So if the market turns around from current levels and heads lower here and the RSI looks like that, then we might have negative divergence. But as we conclude the week here and also as we conclude the month of November, the markets still look good. Take a look at how the MACDs are pointing to the upside on the weekly. There's really nothing on this MACD on the weekly that tells me that the market wants to pull back. So until we get that change on the MACDs, this thing might continue moving higher. Also on the monthly, now we see evidence here that the market is going to stay strong until it comes off these highs here. Just like it did here late 06 coming into 07, late 06 into early 08. This market was on a nice run, which is this period here. This period here. So as long as the market is staying in this general area on the RSI on the weekly and the monthly, this market could move higher. So we have to be very careful about that. If you take a look at the S&P 500 weekly chart, this is week number 1, 2, 3, 4, 5, 6, 7 weeks above this previous breakout at 1709. That's a very strong market. Again, as long as the RSI is trading above that level, this is a market that could continue pushing higher. Take a look at the S&P 500 daily. We start seeing signs of negative divergence now. You see we've been making higher highs here in price, but you can see that the technicals have not been following through, making lower lows. So this is the type of action that could eventually break this market's strong move and push it lower. So that negative divergence is something to take note Also on the hourly for the S&P 500, take note of the negative divergence on the RSI. Market's been making higher highs on the hourly, but you can see that the technicals have not followed through, making lower lows on the technicals. And so this is negative divergence here. So as we begin the new month of December, this could be where the market now starts threatening to pull back, and we are due for a serious correction. You know, the entire 2013 market has not really had a serious correction, so we are due for one, and this is probably where it starts. We'll see what happens. Also on the S&P 500 30-minute chart, you see that we were making higher highs here in price, and also on the 30-minute chart we are making lower lows in technicals here. So the RSI is giving us negative divergence, and this negative divergence could be the reason why, or the setup that pushes this market lower coming into the beginning of the new month of December. Let's take a look at the QQQ hourly chart here, and you can see we were expecting negative divergence here, but the market broke out. So the Nasdaq continues to be very strong with this breakout here. There's no negative divergence like the S&P 500. Take a look at the airline index, which I always like to look at because it gives me some idea of where markets are going short term. For some reason, they tend to lead, and you can see we've been making higher highs here in price. Seem to be a double top here on the RSI. You know, not much information here, but the close on Friday is probably not the best, just because that pullback. And you can see now on the hourly, we have this MACD moving below zero there, and seem to be crossing over, pointing lower. So this MACDs on the hourly for the airline could be telling me early on in the week, the new week of December, we might have a pullback in this market. Let's take a look at the VIX hourly. And what we see here is a 5% thrust into the close of Friday short session. And what I want to show you is, I've been talking about this. There was a wedge here. Now we seem to have come out of that wedge. And every time we've done that previously, like we did here and here, we had a spike in the VIX and a pullback in the market. Also on the MACDs, you see that we are now above zero here and also above zero here. So this could be enough to, you know, to say that the market wants to trend lower coming into the beginning of the first week of December. That's what it looks like based on where the VIX closed on Friday. Now let's take a look at the BKX, the banking index, and you see that we've been on breakout mode ever since we broke out here above 65.98. Looks very good. The thing that I'm watching here is, if you take a look at the green line, this line here seems to be a back test. So this back test of this green line here could be what stalls the market here. Of course, if it's above this buy point on the weekly, then it could continue moving higher. So we need to watch those levels on a weekly closing basis. Another way you can take a look at the banking index is by looking at the XLF. And depending on how the next couple of weeks are going to go, we might have a pullback here in price on the weekly, which might lead to this negative divergence on the weekly. But the monthly looks very good. I have to say the monthly is absolutely looking very good, as long as it holds above this 20.5 level here. So that breakout on the monthly still continues to be in effect. I like the fact that the RSI is trading almost at 3-year highs, if not at all-time highs. Actually 3-year highs on the XLF, and you can see the monthlies, MACDs are making new highs here, and also chance of a fresh crossover here on the monthly. So the XLF on a monthly chart looks very good. Now the only way we can say that things are changing is if we break down below this 20.5 level here. So that's the only way. If this breakout fails, then maybe we start looking for a market that wants to go down. For now, quite frankly, looks good. Of course, if you take a look at the BKX from a monthly chart, you see that the monthly is also showing a breakout. As long as the monthly holds above 65.77, that's a fresh monthly breakout. Now, interestingly, because now we have this formation here, and you can see what happens if we have a down month in December, and it looks like that, then we're going to have a double top here. And this is a monthly chart, so that would be a very big time sell signal in the market. If we get a double top here, we have to be very cautious here. The last time we had a double top was here in 06, here, and then again here. So that was what to me caused this stop here in late 06, early 07. So we have to watch out for this double top possibility. It hasn't formed a double top yet, so we can't assume it has to form a double top, but that looks like it could be a double top on the monthly RSI, and that, if that takes place, is going to be a major sell signal. If we take a look at the TNA, we see that this market seems to be running out of steam. Take a look at this nice channel here. So we are hitting the top line of that channel, and also on the RSI, this level here is where you'd expect some type of resistance here, which has been, RSI has been stalling at this level going back a couple of months. So I would expect resistance from this level. Otherwise, seems to me like this market seems to be slightly tired, and we are definitely due for a pullback. So we'll see how the new week is going to begin, but this definitely is looking like a market that wants to pull back. Let me take a look at the hourly for the TNA, and we see that we ended off the highs on Friday. And let's take a look at what the MACDs are doing. You know, the MACDs are not that terrible, but they're starting to point lower here. So the new week, based on the S&P 500 60-minute chart, let me show you that one more time. And you can see that this negative divergence on the S&P 500 here, this could be the reason why we get a pullback beginning of the new month of December.